this isn't a sphere of influence world anymore. Whether it's the Don Rowe Doctrine or something else, there is a great deal of competition for control. It's having ripple effects on everything from the growth outlook to commodities, rates, and currencies. Yesterday, the ceasefire, I would say it was violated, but apparently it was a Schrodinger's ceasefire violation.
Neither side really wants to go back to that risk scenario of further escalation that could mean more permanent damage to energy markets. Even in the best case scenario, if, say, the war was ending tomorrow, the strait reopened, we could be looking at a couple of months at best before vessels are repositioned, before the damage is assessed. And so that could mean quite a summer of some pain, not only for air travel, but also for chemical plants. And I am definitely watching ahead for food prices.
And now we're going into a third phase, I think, where the market is having to kind of shift its expectations toward a more severe shock. What would I be watching in terms of something breaking? I think it's really around supply chains. In 2021, when we experienced supply chain stress on the reopening after the pandemic, around 20% of global trade was affected. To date, it's around 1%. So really, this is the kind of thing that you will start to hear it either in anecdotal reports or in some of the business surveys, the PMIs. And I think that's what that kind of evidence would really start to spook the markets.
There's an opportunity here on Ukraine and Ukraine financing, including war financing for the European Union to push through things that Orban clearly, with Moscow and Washington's support, would have blocked. But I don't think we should overstate the level of change. Europeans are starting to think differently about the American question and about their dependencies on the US. And you're starting to see thinking in European capitals, and I don't mean just Paris, I mean Berlin and London, about the extent to which we might have some choke points and some pressure points on the US economy, and we might be able or willing to use them.
If you don't trust the United States for your security and defense, nor do you trust Microsoft to keep your data safe in the cloud, you're going to need to build alternatives fast. Now, that is not efficient. That is suboptimal. There are all kinds of reasons why that is not something that the prior era of commercial orientation would have directed. But that is where trust takes us when it crosses over into this existential realm.
The swap line issue, I think, goes to the heart of the question about the dollar safe asset status. And it's really this question of, can the world depend on the Fed to provide dollars in a period of stress when the private sector doesn't want to provide those dollars? And I think, both Scott Bessent and Jay Powell sought to reassure investors on that front. And there was a little bit of reassurance taken, but yet everyone is running around looking for pools of dollar liquidity just in case.
I think there could be a lot of tumult in British politics between now and the party conferences in the autumn. And I think you could see a change in leadership and a lot of manoeuvring about a leadership election. There's no guarantee there'll be a change in leadership, but I do think Starmer and Reeves will come under very considerable pressure in the next few days and weeks.
US-China, I think expectations are so low for this summit, probably rightly so. But typically when, the bar for a positive surprise is low, it's very easy to get a positive surprise. And I think DJT could certainly use a win about now.